the participants window. Anyway, doesn't matter. Just open the presentation that we've prepared for this session. Before going ahead with the presentation, just a quick overview. So there are a lot of changes that have been proposed in this GST Council meeting. If you look at the press release, that itself would have covered about 8 pages, right? But what we also need to understand is some of these proposals are not something that can happen overnight, right? They will have to undergo some of these changes, even require amendment in the relevant GST acts. Right? So some of these proposals will take time. Of course, the circulars on clarification on certain discrepancies or doubts on rate of taxes, exemptions, refund related procedural matters, some of them have come about. And more importantly, rate change notifications have not yet come, because I think some of the proposals that the government or the council has decided upon can face legal challenge. So I think they are deliberating and spending more time on identifying how to get the rate change done in a more streamlined manner, right? So we are yet to get the notifications for change of rates. So most of the rate change related matters that I will cover, I'm covering only significant ones. They are based purely on the press release, and they might differ once the final notification comes in place, right? Let me just quickly do a screen share. Just for me to ensure that everybody is able to listen. Neelakandan, I have unmuted you for the time being. My voice is clear, yeah? I hope. The PPT in my system. Give me 1 second. Rahul, there seems to be a slight bit of a problem with opening the PPT in mine. Can you open it and share it from your system, Rahul?
Yes, sir.
I opened it a couple of minutes back. I'm not sure why it's a problem now. It's in the same link that you had shared. Sorry about the delay, guys. Seems to be a little bit of a.
Sir, is it
My
visible
system
now,
is
sir?
tired for the day. Should come up anytime. Yeah, screen is visible. You can go to the presentation. It will be helpful. Yeah. I think some of the latest changes that I've done are not updated, I think. Just give me one moment, guys. I'll try to go offline and come back in 2 minutes. Sorry about this. Yeah, sorry, I just joined back. I think our problems are past us. Should be able to share the screen any moment from now. Rahul, is my screen visible? The PPT?
Yes, sir.
Okay, great. All right. Sorry to keep you guys waiting. I think we've wasted about 10 minutes, but I'll try to wrap things up as per schedule without any compromises. All right. All right. So jumping right on to the matters that we intend to cover. So first, I will quickly talk about some of the relaxations and waivers that have been granted by the council. Some of them are already effective and some of them likely to be made effective in the next few weeks or months. Right? First point, which is something that we have already seen in the last 2-3 years, the annual return requirement under GSTR 9 is being waived off for taxpayers with aggregate turnover of up to 2 crores. So if your turnover is below 2 crores, you are neither required to file GSTR 9 or 9C. 9C obviously not when you don't have a requirement to file GSTR 9, right? And just one or two additional matters that are being asked for financial year 21-22. Most of you will be aware because of the challenges in the portal and collating the information for the return. Some fields were made optional, right? Out of those, 2 fields alone are now being sought for in financial year 21-22. I think there's a typo. It's 21-22. It's typed as 2012. It's 21-22. Right. So non-GST supplies, outward supplies have to be reported separately. And HSN details of outward supplies will have to be mandatorily reported at 4 or 6-digit level for 21-22. Until last year, these two were not mandatory. From this year onwards, these 2 fields are becoming mandatory, and that's something that we'll have to keep in mind when filing GSTR 9. Right. So up to 2 crores, 9 not warranted. 2 crores to 5 crores, only 9 is required, 9C is not required. Beyond 5 crores, GST or 9C, which is the reconciliation statement, will have to be filed. From the last year, there is no audit requirement. It is only a self-certified reconciliation statement. So beyond 5 crores, 9C will apply. Their old relaxations that were already granted are continuing. So there is no major change or nothing, no change per se with respect to GST or 9C. Okay. And 2 other relaxations with respect to composition taxpayers. I think some of the composition taxpayers had an issue with the portal. They had their cash ledger started reflecting negative balance, right? As if they owe money to the government. So that's something was creating issues, and I think the Infosys team has worked on it and they've tried to sort it out. Which is why this quarterly statement for composition taxpayers for the first quarter of this year, they're already extended it a little bit, and now they're extending it to 31st of, sorry, this one I think is a fresh extension. CMP 8, they're extending it to 31st of July as against the original due date of 18th of July. For the yearly return of the previous year, right now composition taxpayers are only required to file 4 quarterly statements, sorry, 3 quarterly statements, and then for the last quarter, they will just file a yearly return, right? So that yearly return, original due date was sometime in June. It was previously extended up to 30th June. And now they are extending it up to 28th of July. So yearly return for 21-22 for composition taxpayers can be filed until 28th of July without any late fee having to be paid. Right. So that is also a relaxation that has been granted. Moving on, few critical matters. Partly favorable, partly unfavorable. The first aspect is the limitation period for the department to initiate demand and recovery proceedings under section 73 is getting extended a little bit. Right? So there are 2 sections that deal with demand recovery, 73 and 74. 73 is for non-fraud cases, 74 is for fraud cases. 73 prescribes a 3-year limit until which department can initiate proceedings. 74 prescribes a 5-year time limit, right? So this 3-year time limit for the first year of GST, which is financial year 17-18, was originally due to expire in February 2023 because it is 3 years from the due date of filing of annual return. A 17-18 annual return, first year there were multiple extensions, and finally the last date, extended date, was sometime in February 2020. They had given 2 dates for one date for a set of states, including Tamil Nadu, and then another date 2 days later for another set of states. So 3 years from then is the time limit for initiating demand and recovery proceedings under section 73. Now that time limit is being proposed to be extended to 30th September 2023, right? So if you look at it from now onwards, there's still about 1 year and 3 months available for the department to initiate demand and recovery proceedings for the financial year 17-18 itself. right? So we still have time. 1718 can come back to haunt us. Second one, which is a welcome move, favorable, which is in fact pursuant to certain court rulings. When COVID hit the country, we had multiple waves hitting the country coming to a standstill and all that. So what happened? Supreme Court had passed a suo motu order where they said the period starting from, if my memory serves me right, I think 15th of March or could be 1st of March, I don't remember exactly. From that date till February 2022, the period involved in that time frame has to be excluded for the purposes of limitation, right? So there is a law of limitation that governs this country, which prescribes that certain matters have to be done within a certain time frame. Beyond that, it is not permitted to be done, right? So if you want to go and file a suit in court, you will have to, it has to be within the limitation period, otherwise it will not be entertained. Similarly, you have time limits for refund applications, time limit for filing of returns, all right, so on and so forth. What happened? Pursuant to the Supreme Court order, the department also came up with the circular saying that we are also granting certain extensions for certain purposes like filing of returns, filing of appeals, all right, various other purposes. Now, in one case, the registered person who was claiming the refund filed a belated refund claim, which was beyond the 2-year period that is prescribed under Section 54. But if the period stated by the Supreme Court is excluded, then it is well within the 2-year limitation period, right? The department denied the claim of the assessee. Assessee went to High Court. High Court said, yes, for the purpose of refund claims also, this limitation period has to be excluded, and hence the registered person is entitled to make their refund claim, right? So now, in pursuance of these High Court rulings, I think one or two High Courts have decided in this manner. Department has taken a view that, okay, fine, let us permit the registered persons to exclude this for the purpose of limitation period, right? So this is something that can be helpful for people who have any time barred refund claims, right? So this period from 1st of March 2020 till 28th of February 2020 can be excluded for the purpose of computing the 2-year limit that is prescribed in Section 54 or 55 as the case may be. Inverted duty refund claims, anything that is pertaining to past periods, if you want to claim now, you can claim, subject to the period being within 2 years. Refund of ITC for zero rated exports, all of these, you are very much entitled to make a claim now after excluding this limitation, the COVID related lockdown period for limitation. So this is the period that can be excluded, 1st March of 2020 till 28th of February 2022, right? So that's a welcome move. Anybody who has some past refunds that could not be claimed because of the 2-year limit being made applicable can look at making a claim now if appropriate. And consequentially, since they are granting time for making the refund claim, department also wants to take benefit. In case there is any erroneous refund that has been granted, they are entitled to recover under Section 73. For that also, they are excluding the period of 1st March 2020 to 28th February 2022 for the purpose of computing the limitation period under 7310. 7310, there's a 3-year limitation period that will apply. Okay. All right. Few other relaxations in the context of e-commerce transactions. This again is only an in-principle approval that the council has granted. The modalities of this will have to be worked out by a separate law committee because this will require changes to the legislation itself. Parliament has to approve, state legislatures have to approve. But the plan is that as it stands now, anybody who is undertaking transactions through e-commerce operators have to get themselves registered mandatorily. No threshold, nothing whatsoever. Even if you sell one time through an e-commerce operator like say Amazon or Flipkart, you are required to get yourself mandatorily registered, whether you are below 20 lakh limit or 40 lakh limit in case of goods, whether you make interstate, intrastate, none of that matters. You are required to mandatorily get yourself registered. Now what they've proposed, if your aggregate turnover limit is below the threshold of 40 lakhs, right? If you're someone who is dealing only in goods, you have a higher threshold of 40 lakhs. If you're dealing also in services, then only 20 lakhs would apply. But these relaxations are being proposed only with respect to supply of goods. At least that is what the press release says. We'll have to wait for the actual changes to come. So what they are saying now, if your aggregate turnover is below the threshold limit of 40 lakhs, and if you are not making any interstate supplies, you are not required to get yourself registered, even though you might be supplying goods through e-commerce operators. So this is a welcome move that can help smaller players, because once you get yourself registered, then the compliance burden increases, right? So up to 40 lakhs, if you can get away with registration and continue doing your business even through e-commerce operator, then to that extent, the compliance burden of the business comes down. Similarly, composition taxpayers hitherto are not permitted to make supplies through e-commerce operators, or vice versa. If you are making a supply through e-commerce operator, you cannot opt for composition. That is also being proposed to be relaxed. But how this will happen, when this will happen, all that we'll have to wait for the relevant changes to be made over time. I think the press release said they are targeting somewhere. Sorry, I think I've second typo. Jan 2023 is what is my memory from reading the press release, right? So I think they're looking at getting things sorted out within the next 4 or 5 months. So that's on the e-commerce transactions. Moving on to some procedural changes that have been done. A lot of them are definitely good moves that will help the taxpayers. First one, of course, not very relevant for people who are filing returns regularly, which would be the case in most of the participants. But just for your knowledge, in case there is a suspension of registration because of non-filing of returns for the specified period, right? What happens if you don't file your GST R1 for X number of months, you don't file your GST R3B for X number of months under the provisions, department can initiate cancellation proceedings. Once cancellation proceedings are initiated, the proper officer also has a right to keep the registration under suspension. And during that period, you will not be able to file any returns. And hitherto, what used to happen when the registration is suspended, let's say before cancellation, you end up filing all of the pending returns, you pay the applicable taxes, interest, everything is done. To remove the suspension, you will have to apply, meet the proper officer, explain the facts, and get their approval to get the suspension revoked in the system. Right now, they are planning to make it automatic. But this is only for cases where suspension is due to non-filing of returns. Right? Cancellation can happen for n number of reasons. Only where the cancellation or suspension is being proposed for non-filing of returns, as and when all pending returns are getting submitted, filed, the suspension will get automatically revoked. Right? That is how the rule is worded now. Of course, when this will get implemented in the portal and all that, we'll have to wait and see when the GSTN is able to get that implemented. So this is a favorable move which can ensure that you don't have to face any harassment from the proper officer if you want to revoke the suspension that has been made after compliance of filing of all the pending returns. Second, very important aspect, especially for exporters, right? So all exporters, what they do, they are entitled to certain export benefits. Duty drawback is one such benefit. MEIS was another such benefit, merchandise exports from India scheme. That scheme, of course, is now being replaced by another scheme few months back, right? So under these schemes, the exporters were entitled to certain duty credit scrips. So certain X percentage of the FOB value of the exports used to be granted to them as scrips. And these scrips can be utilized by these exporters for payment of customs duty when they import goods. So if you're an exporter, you are importing goods, you are utilizing the duty credit scrips for payment of customs duty, then life is simple. But what used to happen, some exporters, their line of activity was such that they used to procure all their raw materials in the domestic region itself. They used to procure only from the Indian suppliers. Right, so they did not have any requirement for payment of customs duty. So this duty credit script remained unutilized. Those people, what they used to do, there is a provision for transfer of duty credit scripts. You can sell your duty credit scripts to somebody who has customs duty payments to be made, right? So typically, let's say there is a duty credit script of having a value of 30 lakhs. So these people sell it off to them at say 5%, 10% discount, because at least getting 27 lakhs is better than not having anything, right? So they used to sell these scripts worth 30 lakhs, get 27 lakhs, and the person who bought the script used to make use of it for paying customs duty. Now these duty credit scripts were originally subject to 5% tax, and then they were made exempt from a particular date. Some way back, I think in 2017 itself, they were made exempt. Now what happened? The department started taking a view that you're using various inputs and input services, and by using those, you are manufacturing goods and exporting those goods abroad, for which you are not paying any tax. Fine, that is zero rated, not an issue. But you are also getting duty credit scripts by making these exports. And if you are selling these duty credit scripts, you are not paying any GST because the rate notification says these scripts are exempt from GST. So department started taking a view. You are using various inputs and input services for doing export sales as well as sale of duty credit scripts. Part of the inputs and input services are being used for obtaining duty credit scripts, and so you'll have to do proportionate ITC reversal under Rule 42. Right? This is absurd. Because the primary reason why the exporter is doing a transaction of sale of goods is so that he can earn money from the foreign customer. He is not doing exports for the purpose of getting duty credit scripts. That is incidental. Right? Government wants to promote exports. They want to make exporters competitive in the international market. So that is why they grant various export benefits. The department started taking a view that part of the inputs, raw materials that are used, packing materials that are used, are helping in getting the duty credit script also. Right? So this started getting litigated. In fact, we ourselves had 2 cases where the department took an adverse view. So considering all this litigation that is going on, Council in its wisdom has now decided to clarify that for the purpose of ITC reversal under Rules 42 and 43, which deal with ITC used for exempt supplies having to be reversed, the sale value of duty credit scripts need not be included, which means you will exclude that turnover for the purpose of applying the ITC reversal formula in Rule 42 and 43, which means you don't have to reverse any ITC to that extent, right? So this is something that a lot of exporters are facing. This was forcing the exporters to go for the IGST refund scheme, because if you go for ITC refund, you'll have to file application on RFD1, convince the officer that you're eligible. Okay, so all this was happening. Added to this was this challenge of duty credit scripts. So a lot of people were moving on towards IGST refund. Even now, IGST refund is a better option, unless administratively you have some other concerns, right? So this issue is likely to get rested after this clarification. Last one on this slide, just a procedural matter. In case there are certain taxpayers who are within the e-invoice threshold of 20 crores, but they are not required to comply with the e-invoice. For example, you have SEZ units which are not required to comply with the e-invoice requirements. You have government departments that are not required to comply. I think there are a few other banks, financial institutions, all of those are not required to comply with the e-invoicing requirement. So in such cases, the taxpayer is required to put in a declaration saying that they are not falling within the e-invoice requirement, although their threshold is beyond the prescribed limit, right? So just so that the recipient knows that although this person is originally required to issue an invoice, there is a relaxation granted to them and there is smoothness in availing credit. And incidentally, all of you are aware, present limit for e-invoices is 20 crores, but going forward, it is likely to come down. I think there was a news article a couple of weeks back. Some clients started asking whether threshold has already come down to 5 crores. Threshold still remains 20 crores. There is a proposal to bring it down. Obviously, they've brought it down from 100 crores to 20 crores now. Right. So going forward, very likely in the next few months, you can see the threshold coming down to either 10 crores or maybe directly even to 5 crores. Right. A few other procedural changes that they've done which are beneficial. One is for recredit of any erroneous refund that is granted to a taxpayer. So in case you have wrongly claimed refund, department also did not notice it. They also felt that maybe it is eligible, so they granted the refund. Subsequently, you realize that you have claimed excess refund, although you are not eligible, right? So there was no provision for you to get this back in the form of input tax credit, because what you originally claimed refund is the input tax credit. It is not something that is the cash ledger. It is something that is in the credit ledger and the portal, right? So now what they are proposing, you can deposit back the erroneous refund through cash through form DRC03, whereby you can indicate that this is something that you're paying for the purpose of return or refund of erroneous refund granted. And the department is going to bring up another form which the officer can prepare and file at their end. And this money that is paid in the form of cash will come back to your electronic credit ledger. Right? So this is a facility that is being proposed to be granted, which can help cases where you have claimed erroneous refund and want to return it back and claim credit for the same. Another beneficial provision which is yet to be notified, they have said they will notify it soon. The rule for the provision has come up. So originally, if you remember, there was no facility for transfer of taxes, right? You paid your own money. While paying the money in the challan, you have paid SGST, say 1 lakh rupees, CGST 1 lakh rupees, IGST 50,000. There is some, say 20,000 rupee balance in IGST, but there is a shortfall in CGST and SGST. You had to pay CGST and SGST afresh, and this IGST excess cash balance used to remain intact, right? You could not utilize it. Of course, you can claim a refund separately, but you could not utilize it for paying the other taxes because it is your own money. When you are paying the money, you are declaring that I intend to use it for this, but for some reason you have not used it and you have some excess balance available. So there, couple of years back, the portal came up with an option where between taxes you can shift. In fact, you also had a problem where if you pay in tax head, you cannot use it for interest. If you pay in penalty head, you cannot use it for tax, right? That challenge was also there. So they brought in a facility where a particular GST registration, within that you can switch money wherever you want, from CGST tax to SGST interest, from IGST interest to CGST penalty, whichever way you could move your money in the cash ledger, right? All that I'm talking about is the cash ledger, not the credit ledger. Now another proposal has come. Section is yet to be notified, came up in the 2022 budget, if my memory serves me right. So where they said distinct persons. What are distinct persons? Single entity doing business in multiple states, right? So you have a factory in Tamil Nadu, you have a sales office in Karnataka, right? You will have separate GST registrations. You have excess money in your cash ledger in Tamil Nadu, but you are now required to pay money in Karnataka. So portal is now planning to permit transfer of money from Tamil Nadu GSTIN to Karnataka GSTIN without having to pay money afresh in Karnataka and claiming refund separately in Tamil Nadu, right? That is a proposal that is in the works. The rule is notified, portal will have to be changed suitably for giving effect to this. And these transfers can be done subject to the relevant taxpayer not having any outstanding liability in their electronic liability ledger. If there is any liability, it will not be permitted. And again, these transfers between distinct persons can happen only between CGST and IGST or SGST and IGST, as the case may be, right? Between CGST and SGST, it is not intended to be permitted because it becomes two different states getting involved. Right. Another aspect, of course, this has a very long legacy. There are two sides to this coin. What has happened? The department had a view that interest has to be paid on the liability that is settled using input tax credit also. Right? That is how the section was originally worded, section 50 subsection 1. That got debated, disputed at multiple levels, and then a change was made to the section. Say a proviso was inserted saying that if the supplies are reported in the relevant tax period appropriately and the return is filed within the due date, then there is no requirement to pay interest on the output liability that is paid using input tax credit, right? Only the cash portion has to suffer interest at 18%. Now, I'm not sure how many of you are aware. One catch in the way the proviso is worded is that just because you use input tax credit for settling your output tax liability does not mean you don't have to pay interest, right? It is important that the supply made in a tax period gets reported in the tax return of the same period. For example, if you made a supply, let us say in April of 2022, you are required to report that in the GSTR 3B of April 2022 and pay the taxes. If for some reason you have failed to report that supply in April, you are reporting it, you are identifying 2 months later, you are reporting it in the GSTR 3B for June month. Although you might end up using input tax credit for settling this output liability, you cannot get away from the interest provision, right? So one critical condition for you to say that output tax paid through input tax credit, I will not pay interest, is that the supply has to get reported in the same tax period. If it is going to get reported in a subsequent tax period, then you might end up in trouble, right? And of course, another incidental condition which they're clarifying, the return has to be furnished prior to initiation of any demand or recovery proceedings under section 73 and 74, which we discussed a few minutes back in one of the earlier slides. Second change, which came up in the recent budget of 2022 with retrospective effect. The amendment, the proviso to section 50 subsection 1 also was retrospective effect. It was a welcome move. Everybody was happy. But this 2022 budget is causing some concern. Originally, section 50 subsection 3 used to talk about a 24% interest, higher interest rate of 24% per annum. But that covered only cases where after matching process happened between the supplier and the recipient and unmatched ITC was reversed, if you re-avail that unmatched ITC because now the supplier has done the necessary filing, but you have re-availed that ITC wrongly, only then 24% interest used to apply, right? That matching process never came into place. GSTR 2 was never notified. GSTR 3 was never notified. We are still living only with 1 and 3B. We only have 2A and then 2B added to the bucket of returns, right? 2 and 3 never saw the light of day. Now, this subsection, because of this absence of matching, never was, it was effectively toothless, right? It could never be implemented. I remember a lot of people used to take a view that input tax credit, if reversed, whether 24% needs to be paid because of 53. My view was always that it is not required because it is only applicable when the matching process is in place and post matching there is some wrong credit that is being availed. Now what they have done, they have amended section 50 subsection 3 with retrospective effect from 1st of July, and they are now saying if you avail ITC wrongly and you have utilized such wrong ITC, right? So at least that benefit they've given. Mere availment of wrong ITC is not going to result in any challenges. If you have also utilized that wrongly availed input tax credit, then such input tax credit will have to suffer 24% interest from the date of utilization till the date on which you reverse that back or make a payment to that extent, right? Now this has been made effective from 1st of July 2017. Of course, the section is not yet notified. Once it gets notified, it will have retrospective effect because the amendment in the act itself was that it will have effect from 1st of July 2017. Now this is something which can cause issues, especially for past periods. At least going forward, we can look at ensuring that this higher rate of interest is being complied with. But for past periods, department will try to invoke this provision and say you should have paid interest at 24% and not 18%. And this is likely to get litigated where some large numbers are involved. We'll have to wait and see how this will pan out. That is on the interest related part. There is a separate rule that has been introduced to shed some clarity on this matter. Rule 88B is what has been inserted, and that is what we have summarized in this slide. Yeah. And a few other changes with respect to refunds. A new procedure has been notified for claiming input tax refund for export of electricity, right? So the present system is such that for any export of goods, you need a shipping bill in place for you to make a refund claim, whether you are going under IGST refund mechanism or under the ITC refund mechanism. Electricity, which is deemed as goods, never had such shipping bill requirement, right? So all of these electricity exporters had challenges with claiming refund. So which is why government has made some changes to the rules and said the process will be slightly different for people who are exporting electricity, which is expected to help them going forward. And second move, which to a certain extent was already being followed by the GST portal for IGST refund mechanism. If you now go and claim refund of input tax credit for export of goods, for the purpose of the refund calculation, only the lower of FOB value and invoice value will be considered, right? So if you look at the ITC refund formula, you'll have a numerator which will talk about zero rated supplies divided by the denominator which will have total turnover. So the zero rated supplies, the proposal is to restrict it to lower of FOB value and invoice value. This can have a significant impact, especially for people who do their sales on CAF basis, right, where they take care of the cost, insurance as well as freight. In those cases, there is going to be a slight hit in the amount that they will be entitled to get as refund. This is of course prospective and needs to be complied going forward. Third matter relating to refund, this also is pursuant to a recent court ruling. This inverted duty refund, there was some dispute between the taxpayers and the department, where taxpayers used to say the refund can be claimed on inputs as well as input services, right? So any accumulation of ITC, whether because of inputs or input services, can be considered for claim under inverted duty structure. Department was of the view that only inputs related ITC can be considered. There is no provision in the law. The section is worded that there is no ITC refund on ITC pertaining to input services, right? Gujarat High Court ruled saying that refund can be granted on ITC pertaining to input services also. Right? But our own Madras High Court ruled against the registered person, saying that input tax credit refund can be claimed only pertaining to inputs under the inverted duty structure. Matter traveled to Supreme Court. Supreme Court upheld the Madras High Court's view and said, yes, the provision is such that you can claim refund only for input tax credit on inputs. Refund is a concession that is granted, is not something that is a vested right. So the government has the right to place restrictions on the refund provisions, and in the section it is worded such that refund can be granted only for ITC on inputs, right? But however, when making this ruling, Supreme Court observed that the formula for inverted tax refund is slightly skewed, in the sense that it is taking a view that none of the input tax credit pertaining to input services are being used to pay the output tax, right? And they recommended that the GST Council remove this anomaly so that the court does not have to step into the shoes of the legislator and make changes on this front. So pursuant to this, the GST Council has now said in the refund formula for inverted duty structure, which is available in Rule 89, the ITC on inputs will be considered on one side, but the output tax that will be considered for comparison will be restricted to the proportion of input tax credit on inputs divided by the total ITC on inputs and input services. So this is likely going to have a positive impact on persons who are claiming refund under inverted duty structure. So this benefit can be made use of going forward. And please remember, under inverted duty structure, there is no ITC refund that you can claim on capital goods. It is only on inputs, not available on input services and not available on capital goods also. Second matter on inverted duty refund, this dispute came up when there were change in rates, right? Sometimes government used to make a reduction in tax rates. So you procure a material at 8%. This happens in the, to use there what happened, you used to procure something at 18%, you procured it, you have it in stock. The government now says it is going forward taxable only at 12% or 5%, right? You have stock which is taxed at a higher rate, but you will end up selling it at a lower tax rate, which means your ITC is not going to get utilized fully. So some people started making claim as inverted duty refund for these cases. Department took an adverse view, saying that this is not something where when you purchased itself, there is an inverted duty structure. When you purchased, the item was taxable at 18% only. Only at the time of sale, there is a change in rate, right? So those cases, department took a view that they will not permit refund. But this had a problem in cases of concessional rates also. So what happens sometimes, for example, merchant exports. Merchant exports, you are entitled to charge tax at 0.1%, right? But your inputs are going to be taxed at the appropriate 5%, 12%, 18%. These sort of transactions can again result in accumulation of input tax credit. So in such cases where your purchase tax rate and sales tax rate are different at the same point of time, because you are doing it as a merchant export transaction, you are charging lower rate, right? This is not something where the government has done a change between what the rate was previously and what the rate is now, right? So there is no change in time frame. At the same point of time, your purchase is taxable at a higher rate, your outward supplies are taxable at a lower rate. So those transactions are being permitted for inverted duty refund claims. And this again is a beneficial move that will help such cases. Last point on the refund matter, there are a few other related to IGST refund. We'll cover it in the next slide. So this again was slightly debated, litigated. There are duty-free shops that are available in both the domestic arrival and the departure lounges of international travel in airports, right? So what happens to the duty-free shops that are the departure terminal? Anybody who enters the departure terminal as a passenger is going to end up outside the country, right? They are going to travel out of India, out of the Indian territory. The duty-free shops took a view that these supplies are in the form of exports, right? Because all of these duty-free shops, if you have noticed, they will make a sale only after recording your boarding pass for the foreign flight, right? They will trace the supply to a particular passenger's boarding pass. That's how their system also works. And usually they get the money also in foreign currency only from the persons, either through card or cash, right, under foreign currency. So these transactions were treated as exports by the duty-free shops, but department took a slightly different view because there is no shipping bill in place and all that. Now they have agreed that yes, these are also exports because goods are moving out of the country. Because department took a different view, government took a different view, they had brought in a separate rule by which refund could be claimed for these transactions. Now they said no, we are okay with treating this as exports, and so they can follow the regular refund mechanism under Rule 89 or 96 as the case may be. So this again will help in reduction of procedures. A few other procedural changes on the IGST refund mechanism where you pay tax on exports and claim refund of the taxes paid. In case there is a mismatch between shipping bill filed and the GSTR1 return filed by the exporter, the refund application will be deemed to be filed only on the date on which such mismatch is getting rectified, right? So until then it is not treated as a valid refund application. Only on the date of rectification the refund application will be deemed to be filed, and that is the date from which your respective timelines will start ticking. Second one, which again hopefully should help persons who are claiming refunds, especially the IGST refund part. So what used to happen, IGST refund is an automated mechanism, right, where your shipping bill acts as the application for refund, and if it is matched with GSTR1, the money automatically gets credited to the particular tax person's bank account. But in certain circumstances, department had a right to withhold the refund, right? In case there is a risky exporter, right? There are 2-3 reasons when department can decide to withhold the refund. Now, in such cases, there was no mechanism that was prescribed on how the refund will end up finally. Whether what sort of proceedings the department will initiate, what action does the taxpayer have to initiate to claim this money from the department, right? There was no clarity on that. Now they have said, in case there is a withholding of refund, such withholding of refund will automatically result in generation of a refund application in RFD1. Portal will take care of this. An automatic RFD1 return will be generated. It will be sent to the proper officer, and the regular process that is followed for claiming ITC refund through RFD1 will have to be followed, which mechanism can be used by the taxpayer to get the money back in such cases, right? And of course, they have added 1 or 2 other scenarios where the power to withhold refund is being granted. Right. Okay, these are changes that will have an impact on our day-to-day lives. So some changes are being proposed in GST or 3B. Yeah, before I get into this, something that I usually tell a lot of people who ask me on the set-off matter, which I think somewhere there is a disconnect some cases. So the present ITC set-off structure is such that the IGST credit has to be utilized completely first, right? And once that IGST credit is exhausted, only then you will have to go towards utilizing your CGST and SGST credit. Right? That's the way the order of utilization of the input tax credit works. So what happens in cases where there is a lot of intrastate supplies, right? You will have a lot of IGST liability. So what the portal will do, your entire IGST credit that is available will be used to settle IGST liability. Okay, I will probably give some examples here where it will make life easier. 423. I think you can manage. Yeah. So IGST credit used to be utilized first. If you still have some more IGST liability, then you are free to utilize your CGST credit or SGST credit in whatever proportion you want, right? That is how the rule is worded. But what the portal does is that automatically uses the CGST credit first. It does not take 50% of CGST credit and 50% of SGST for utilization. It uses the CGST credit itself first, which means what will happen? Your CGST credit will come down, but your SGST credit will keep accumulating. Just give a quick example. Let's say you have 10,000 rupees of IGST liability and say 500 bucks of CGST and SGST liability, right? I have credit of say 7,000 IGST credit is there and say around 4,000 CGST and SGST credit is available, right? What the portal will do, it will first use 7,000 rupees IGST credit for settling the IGST liability, right? And then what it does, it uses 3,000 rupees of CGST credit. It does not use 1,500 CGST and 1,500 SGST. Out of this 4,000, entire 3,000 is used. Rahul, the Excel file is visible, right? I hope the screen share has changed suitably.
Yes, sir.
Yeah, okay. Out of 4,000, 3,000 gets utilized. You have 1,000 rupees remaining. Out of that 1,000, here you will have a 500 rupee utilization. And here you will have a 500 rupee utilization. Right? So what now happens? IGST credit of 7,000 became 0. CGST credit of 4,000, out of this 3,000 got utilized here, 500 got utilized here, you still have 500. And you have SGST credit of 3,500 now, right? You see this anomaly? What we have all learned so far, whatever is the tax rate, CGST 9%, SGST 9%, CGST 6%, SGST 6%, CGST 2.5%, SGST 2.5%. It is all equal, is what we have learned and understood. But if you let the portal do the set off, this is the number you will end up with, right? So what is the challenge or the drawback in this? Let's say in the next month, your interstate sales are coming down and your intrastate sales are going up, right? So let's say your CGST liability is going up to 6,000. SGST liability is also going up to 6,000. Now, how much credit do you have? You, in fact, this might not help our case. I'll put some slightly different numbers to help you understand. Okay, let's say there is a 2,000 rupee, 4,000 rupee liability that is coming up in the next month. You have 4,000 rupees credit with you, but can you utilize this entire 4,000? Not possible. You will be entitled to set off only 500 here and 2,000 here, which means you will have to shell out about 1,500 bucks in cash, right? So although you have credit on the whole, you don't have adequate CGST credit to utilize against your intrastate CGST liability. So this is something that I've observed in a lot of cases, because while filing the return, people just submit it with whatever set of mechanism the portal itself automatically does. So please remember, whenever you utilize CGST and SGST credit, ensure that you do an equal utilization. Okay, that's the best possible scenario that you can have. So in this case, how much IGST is required to be paid after IGST credit set off? You have 3,000 that needs to be paid. In the 3,000, use 1,500 CGST, 1,500 SGST. Portal will say only CGST, but you will have to go and change it manually. If you do that, then you will end up with 2,000 rupee credit available under CGST. Sorry, 2,000 rupee credit available under CGST, 2,000 available under SGST, which can very well be utilized for paying tax in the next month in the example that I've given, right? So this is one critical matter that you will have to remember as far as set off is concerned. Please don't go with the automatic set off that is being done by the portal. Please take a look at the set off numbers and make any changes if required, right? So this is something that I wanted to mention so that people are able to benefit from this change in the set off mechanism. Right, now coming back to GSTR 3B, there is one new table that is being inserted below the existing 3.1, where supplies on which e-commerce operators are required to pay tax. There are certain services for which e-commerce operators have been mandated to pay tax. For example, omnibuses booked through Redbus, right? Or say, for instance, plumbing services which are being booked through an e-commerce operator, your rent-a-cab services, Ola, all of these. In all these cases, e-commerce operator is required to pay the tax on behalf of the original supplier. So those sort of transactions are now being required to be reported in a separate table, both by the e-commerce operator and also by the supplier if such supplier is registered, right? So those will not form part of the regular table 3.1. It will move to a separate table 3.1.1. So of course, this change has been notified in the form. When will it come up in the portal is something we'll have to wait and watch. But as soon as that change comes up in the portal, it's something that we'll have to be careful about and comply. Second aspect, table 3.2, which deals with the separate disclosure of intrastate supplies being made to unregistered persons, composition persons, and UAN holders. Now, this intrastate supply is something where the government is facing a lot of challenge. Unless place of supply of the intrastate supply is known clearly, the government will not be able to distribute the taxes to the appropriate states. Right? So GST is a consumption-based tax. The state that ends up consuming a good or service is the state that has to get the appropriate share of revenue. But if place of supply is not specified properly, or place of supply is not known to the government, they will not be able to distribute the funds. Now, in various registered persons cases, what is happening? This table 3.2 is being ignored, because table 3.2 does not have any impact on your electronic liability ledger. That is more like a disclosure. Whatever number you put, your total liability is not going to change. So either people don't put numbers at all there, or sometimes they put inappropriate numbers. To avoid this, the proposal is that these intrastate supplies made to unregistered persons, composition taxpayers, and UAN holders will now get auto-populated from the information that you report in GSTR 1, right? So this table likely might not have to be filled in manually, but you will have to be careful while reporting these transactions in GSTR 1 so that the appropriate data gets populated here. And another critical matter on ITC reversal, right? I'll quickly move on to the table so that it is easier. But conceptually, what we need to understand, historically, what we used to do, the ITC that is ineligible under section 17.5, is typically blocked credit. We never used to bring it under the regular ITC table. We used to report it below the last two lines saying that it is ineligible in nature. And that ineligible ITC never used to come to the electronic credit ledger, right? So only eligible ITC we used to report in all other ITC that used to go and get added to the electronic credit ledger. Now the present change in the table is such that you are required to report that as part of your all other ITC, and under ITC reversed, you will have to include the blocked credits also. So what I have in this table here, the first column is what is available now. The second column is what is the change that is being proposed. So previously under ITC reversal, the return only required reporting of ITC that was reversed under Rule 42 and 43, which is typically are common credit. And other reversals used to come up as a second line. Now they've added two more aspects to this particular entry. They are saying blocked credit under 17.5 also has to be reported here, which means your all other ITC should be inclusive of blocked credit. They are doing this to help the taxpayers file their returns easily with the data available in GSTR 2B. Right? 2B will have blocked credits also. 2B is not going to be bothered about whether this is eligible blocked. That is something that the taxpayer has to decide. So since the 2B report provides blocked credits also, the form is also being modified in such a way that you report the entire ITC that is appearing to be in the first portion of the table under all other ITC and various other heads as the case may be, and then reduce the blocked credit as a reversal under the next line item, right? So that is a change that is being proposed. This again will involve some thought process with persons who are filing returns to see how they are allowed to modify their either workings or their software applications to ensure that the data gets captured properly in the relevant tables, right? And the ineligible ITC portion, which previously used to cover 17.5 blocked credits, is now being reworded to say other details. So this other details is only a disclosure number. This is not going to have impact on your electronic credit ledger. What is being required to be disclosed here? ITC reclaimed. You had reversed some ITC, which you are now reclaiming back. Such amounts are required to be reported here. And the funny part here is it only talks about ITC reclaim, which is previously reversed under 4B2. 4B2 is others category. It is not the reversal under Rule 42, 43 or 17.5. It is the others category. The government is of the view that there cannot be any reclaim of ITC if there is reversal under item number 1, which is 42, 43, okay, which is absurd because Rule 42 itself provides a mechanism where you do monthly reversals. At the end of the 12th month, you do an annual excise, and if you reversed more credit, you reclaim. If you've taken excess credit, you will reverse now, right? So the rule itself provides for a scenario of reclaim of credit. Similarly, Rule 43, capital goods, let's say they were originally used for exempt supplies, you will reverse credit. But subsequently, if they are now going to be used for taxable supplies, you are entitled to claim the credit. But for some reason, department has taken a view or they have an understanding that any reversal that happens under 1, which is under Rule 38, 42, 43 or 17.5, it cannot be reclaimed, and so they have not given any particular line item for that. But for practical purposes, any reclaim, ideal to report it under the new table for other details. Second item, ineligible ITC under section 16.4. This is the ITC that is beyond the prescribed time limit. So you have time until 20th of October to claim ITC. The section has been amended to November, but that amendment is not yet notified. So as it stands now, your time limit for claiming ITC for a financial year is up to October 20th of the next year, 20th, 22nd, depending on the cases need, right? So any ITC that has been reported by the supplier beyond that stipulated period, that has to get reported here, and any ITC that is restricted due to place of supply provisions. This place of supply issue happens especially for hotels. Let's say somebody from Karnataka is coming and staying in a hotel in Tamil Nadu. They have their business in Karnataka. They have come here for some visit. The Tamil Nadu hotel will charge only Tamil Nadu SGST and CGST. Right? They will not charge IGST because the place of supply for the hotel accommodation services is Tamil Nadu, and so they will charge only they will treat it as an intrastate supply. And for this transaction, the Karnataka person is not entitled to credit. These transactions also will appear in 2B. 16.4 time limit cross transactions will also appear in 2B, but the 2B report itself will say they are all not eligible for input tax credit, and that is just required to be disclosed or reported in this particular line item. And the press release also states further extensive changes are being planned. Now, what sort of changes, when that will happen, we'll have to wait and see. But I think these changes have to be made because 3B was originally meant to be a temporary return. Okay, they said 2 and 3 operationally it is becoming time consuming for us to bring it into effect. So we'll take some time to get it in place. Until then, let 3B function. Now 3B has become permanent. 2 and 3 have gone, right? So somewhere the government also has to expand the 3B form in such a manner that in this form itself, they're able to capture most of the detail that they originally expected to capture in the GSTR3 form. So these changes are bound to happen, and we'll have to see how it works out in the next few weeks and months. Right. Few other incidental matters before I go to some of the key tax rates, right? Certain guidelines have been issued on transactions of fake invoices. Fake invoice is basically a case where the invoice is raised, but there is no actual supply underlying the invoice, right? So a document of tax credit alone is issued, which is used by the recipient to claim tax credit without actual supply of goods or services taking place. So in these fake invoice cases, some guidelines have been issued as to what sort of action needs to be taken against whom. The crux of the guideline is that any person who ultimately retains the benefit of the fake invoice and utilizes it for settling actual tax liability for a genuine outward supply. Okay. So if you are actually making an outward supply and to pay the tax, you are using input tax credit that came through a fake invoice. In that case, demand and recovery proceedings will be initiated against you. If you are somebody who has either originated the fake invoice without actually making a supply, or you have acted as a pass-through or conduit for transferring the credit, on those persons, demand recovery proceedings under 73-74 will not be initiated because there is no underlying supply itself, but penal proceedings will be initiated against everybody, right? So demand and recovery only against the person who ultimately uses the input tax credit for settling liability for an actual outward supply. Penalty proceedings will be initiated against everybody. Of course, there are separate subsections which cover each of these persons who initiated the transaction, who received benefit, who are involved in the transaction. All of them are separately covered under the penal provision. So penal proceedings will be initiated against all the persons concerned. Now moving on to some tax rate related clarifications. I am not going in deep into the tax rate changes, right? Because there are quite a few and it is different for each industry. So might not really make sense to spend a lot of time on that, especially because the notifications have also not come, right? So I'll just quickly run through some of the rate changes that will apply for a lot of people, either for yourself or your suppliers, right? So that you are aware of how to handle such cases. So that's pretty much what we'll be covering. Specifics on tax rates, if any, can be handled separately. It will not be part of this session. One aspect, beneficial provision for tour operators. Sometimes Indian tour operators render services to foreign residents, where partially the tour will happen in India, partially the tour will happen in some other country, right? In those cases, the present provisions are such that the Indian tour operator has to levy GST on the entire consideration. So this makes them slightly uneconomical when compared to foreign tour operators. So to give them a benefit, they have said it is sufficient for you to pay tax on the proportion of the charge that you make, which pertains to the Indian part of the tour. But the maximum reduction or reduction that we will give from the total value of supply will be subject to a maximum of 50%, right? So this also has to come up through rate notification, but this is what the press release says in the context of Indian tour operators. GTAs, so far 5% rate used to apply under reverse charge. If the GTA opts for forward charge, they will have to pay under 12%. They cannot go for 5%. But now there seems to be a proposal where GTA under forward charge mechanism also can opt for both, either 5% without ITC or 12% with ITC. But they will have to choose it at the beginning of the financial year, and that will continue for the rest of the financial year. That's a change that is being introduced for GTAs. But most likely, I think GTA is a sector where it's slightly mostly unorganized. So they usually go for the reverse charge mechanism, very rarely under forward charge mechanism. Third, very important clarification. There were many advance rulings that were issued adverse to taxpayers, where they said you buy a parcel of land, you develop that land, you convert it into sites, get approvals, lay some roads, put some drainages in place, allocate some park area, right? because these are all required for you to get the approval under the local authorities itself, right? So when these sort of changes are being made to land, the department took a view that you are not selling just land, you are doing some value addition to the land, you are creating drainage, you are putting roads. So there is some development that is happening to the land, and these development related consideration has to be subject to GST, right? Almost all tax professionals contested this view, saying that because of doing all this, the nature of the land does not change. It is still land. It was unleveled land, right? It was a large piece of land. It has now become transformed into smaller pieces of land, which can be used by the prospective purchasers for their own residential houses, shops, or whatever it might be. Nature of the land does not change. It used to be land, it still remains land. So there is no transaction other than sale of land, and so there is no GST that is required to be paid. The government has now agreed. They have issued a, of course, I think the relevant circular on this is yet to come, but the press release is clear, saying that sale of land, even after doing any leveling or providing drainage, will continue to be sale of land only and will not attract any GST. This will be a welcome relief for real estate developers who are into development of land and sale of plots. Fourth matter, again to reduce litigation, to grant peace to taxpayers. Ice cream parlors used to treat themselves as restaurants and pay 5% without ITC. Right? That is what they were doing from the beginning. At some point of time, department took a view that ice cream parlors don't really cook or prepare any food items at their premises. It is all ice cream that is already manufactured, comes to them in packs. They just take that and serve it to the customers. It is not similar to a restaurant service, and so it is more of a supply of goods and not a supply of service. And so 18% has to be charged with ITC, right? And this clarification came up, and there was a concern that department can take an adverse view for past periods and demand 18% tax in place of 5%. To put that to rest, they now said for the period from July 17 to October 2021, when the clarification came, if somebody has already paid 5%, we will not trouble them. Let that be. That is considered as being regularized in nature. Right? That's something that will put to rest the sword that was hanging on ice cream parlors. Fifth matter, electric vehicles, whether they are fitted with battery pack, whether there is no battery pack in the electric vehicle, whichever way it might be, 5% tax is applicable, because the notification wording is such that there is something relating to battery being present. So people took a view that if battery is also not sold along with the vehicle, then lower rate will not apply. Government has said whatever you do with battery, without battery, 5% will apply. Last few critical changes which will affect you and me even as a common man. The hospitals, right? So far our understanding has always been hospital services, composite in nature, healthcare services are exempt. Government is now proposing to levy 5% tax on room rent exceeding 5,000 per day. Government is of the view that somebody who is staying in a room with rent of more than 5,000 per day is enjoying luxury. They are not, of course, not luxury. They take a view that it is luxury, they will put 28%. But somewhere they are taking a view that this is something that is not really required for healthcare. Even lower tariff is more than adequate, but they are enjoying something more than healthcare services there, and so there is some GST that needs to be levied. Now, this single entry alone has created a lot of complications. So much of debate is going on because there is a challenge to the government on how to give effect to this itself in the notifications. This entry alone, I am pretty sure, is causing a delay in the issue of road notifications, because composite supply treats all of these medical services together as healthcare services, whether it is room rent, ICU charge, doctor fees, medicines given to inpatients, everything put together, it is one single supply of healthcare services. Now, how is the department artificially going to break this into two supplies, right? Is something that is very challenging, and we'll have to see how this happens. But for now, the press release states that any rooms given to patients, inpatients, exceeding 5,000 per day, 5% ITC will have to, tax will have to be levied without any input tax credit. Second move, which is going to have a cost impact, hotel accommodations priced up to 1,000 rupees per day, which were so far treated as exempt, are now being subject to 12% tax. So until now, what used to happen? Below 1,000 exempt, 1,000 rupees to 7,499, 12%. 7,500 and above used to be 18%. Now there are only two slabs. 0 to 7,499, 12% tax will apply. 7,500 tariff and above, 18% will apply. So all hotels, there is no longer going to be any exempt supply with respect to room rent. Entire room rent is going to get taxed at 12%, unless you have something above 7.5, in which case you will also have 18% coming into place. Third matter, which again can create trouble even for people who are so far unregistered. If you let out a house to a business entity, by business entity, the press release says people who are registered under GST, right? So if you let out a house to a business entity, then you cannot enjoy the exemption granted for residential let out. Whether the business entity uses it as a guest house, right? In fact, the entry used to apply only if it is used for residential purposes. If it is used for commercial purposes, there was no exemption anyway. But now what they are proposing, if you have let it out to a business entity, which is registered under GST, even if they use, even if they use it for residential purposes, it has to be subject to an 18% tax rate, right? So this is going to create challenges for people's. Let's say somebody has a couple of house properties, all residences, they're letting it out, getting say 30 lakhs rent. Everything is exempt, so far they wouldn't have taken any GST registration at all. Now, out of this 30 lakhs, if 5 lakhs is coming from some entity which is registered with GST, for this 5 lakhs, they allowed to pay tax, get themselves registered, file quarterly returns, all of those compliance will come in place. So this is something that could have an impact for people who own a lot of properties and earn rent. Last one, foreman services to chit fund. For the commission charged by the foreman, 12% was the tax rate hitherto. It is being proposed to be increased to 18%. All of these tax rate related changes they have proposed 18th July as the effective date. We are already on 13th now, only 4 more days to go. So far notifications have come. We'll have to see whether it will come at least in the next 1 or 2 days, because the industry also needs adequate time to understand what the actual change in the notification is and all that. There is also possibly a change that the date can get deferred, because we have only 4 more days for this to come. But this government is capable of throwing surprises. So you can even expect notification on 17th and say it is effective on 18th. We'll have to be ready to manage with that change, right? This is pretty much what I had wanted to cover in terms of the key changes from the council meeting. A lot of these changes will see effect only in the subsequent notifications, circulars, or the rules. And as and when they come, we will have to see how they take shape as compared to what was there in the press release. So I think we're at 4:50, right? So I think we can take up questions if there are any. Is the chat window open to everybody? Not sure what I did in these settings. Or if it's not open, you have a raise hand option under the reactions button at the top or bottom, wherever it might be in your system or mobile. You can use the raise hand option based on which we can unmute you for you to raise your question. Okay, either everything is clear or nothing is clear. Fine. Okay, looks like there are no questions that are being Is there any changes in hospital industry? As far as hospitals are concerned, like I mentioned, except room rent, to my knowledge, nothing further other than room rent, Vijay. The only change that is being proposed is in the context of room rent exceeding 5,000 per day, which is proposed to be taxed, which was so far exempt. Okay, so I think the chat is active, so people can post questions in the chat itself rather than raising hands. Any change in fixed asset sales? Fixed asset sales, there is no change that is proposed now. But since you asked it in the context of a hospital industry, see, hospitals typically don't take input tax credit for any of their input services or capital goods because their output supply is exempt, except maybe to the extent of medicines which are sold in the medical shop to outpatients. Inpatient sales are exempt, right? So they do not take credit on any of those assets. Now, does that mean that when you sell that fixed asset, you don't have to charge GST? No, you have to charge GST when you sell a fixed asset off at the value at which you are selling at the applicable rate, 12%, 18%, depending on the case, right? So although hospital theoretically exempt from GST healthcare services, in the event of a fixed asset being sold, GST will apply. You will have to get yourself registered and pay taxes, right? That is something that has been there from the beginning. There is no change in that particular requirement. Vijay Lakshmi is asking for any changes in electric bikes. Electric bikes, I think there is just a clarification saying that with or without battery, it is continuing to be at 5%. I think there is no other change that I remember. We'll have to wait for the notification to finally come to see if there is any other change. Is GST applicable for educational institutions for charging fees? Depends on what fees. Suruchi has raised a query. If you can tell me what fees, then we can see whether it will apply, because anything that you charge as part of the curriculum of the student, whether it is hostel, bus, lab fees, book fees, whatever it might be, it is part of the educational course that is being offered to the student, so there is no GST implication there. Even value added courses, all of those will get covered because it is something that you are doing it for the student as part of their undergrad or post graduation course. Usually it is exempt. So in case there is some specific type of fees on which you need some clarity, we can probably have a discussion later on separately depending on the facts of the case. But generally, fees charged from students for the education services rendered to them is exempt, and so there will not be any GST requirement there. Tuition fees, residential hostel fees, food, all of that exempt. If it is charged from students, no problem. Any other queries? Okay, I think that's pretty much what we've got. In case there are any further questions, you can feel free to drop an email to these email IDs that I've mentioned. We'll see if we can help you out in addressing the query. All right. So thanks everyone for joining in today. We hope that this session has been useful, especially to understand the changes that have been proposed in the council in the recent meeting. Maybe if after, I don't expect any major changes to be notified in the next few days other than the rate changes. In case there is something else major that is being notified, and if required, we'll see if we can hold another session to talk about those changes. Right. Thank you for the patient listening. Have a good day of whatever rest the day is available. Thank you.